Hey guys, here's a real quick trade alert update for November 28th. We are at about 7 o'clock, 7:15 p.m. Eastern Standard Time. So obviously, New York session has finished. We're heading to the Asian session. So let's take a look at what's happening right now. Let me close the window for you. All my trades are still in play. Let's go one by one and tell you what's about to happen tomorrow. So cable is still trending around this area. Now, if you're a short-term trader, then you might have a pretty wild market, these couple 2 days, just because you have up and down trend. Tomorrow, the biggest thing about US dollar, or maybe tomorrow or maybe Thursday, is the tax reform bill. Now, what's happening right now is that the two Republicans that originally are opposed to the bill, right now they are on board. Right now they said they at least they made this comment, say they are on board. So if that's the case, if we really can pass the tax reform bill by this week, no matter what version it is, that's a huge boost for US dollar. So that's why you might have this volatility. Let's take a look at the dollar yen. You might have this kind of volatility in the US dollar. If you take a look at the S&P, let's see SPY. Now, I don't trade stocks, but just let you know that, it's okay, let's take a look at 4-hour chart. It's more accurate today. Actually, let's go to 1 hour because, the trading session. So you look at that. That's if you just come back by a couple hours. Now, stock market closed at 5 p.m., I think. So you have 8 hours of trading hours, 1, 2, 3, 4, 5, 6, 7, 8. So you do have this gap up. Okay, so gap up. Now, just look at the S&P. It's a very promising pictures, at least for now, and that's just really the effect from this tax reform bill. And if that's the case, again, as I mentioned beginning of the week, it's going to be a geopolitical market pretty much from now till the end of the year. Okay, because economically we don't really have much going on right now. That's a surprise. Okay, everything that will happen has been known and been digested. As I mentioned, look at the CME market for the December rate hike, already pricing at 90% or more. So really, there aren't much surprise economically, but there will be a lot of surprise geopolitically, right? For the first thing for US, of course, tax reform bill, Russian gate investigation, for Britain, Brexit negotiation. And for Europe, Germany, are they going to have another round of negotiation for the coalition of government, or are they going to run a snap election? Now, for the world, North Korea obviously launched another missile strikes today. And as I mentioned in my Monday weekly video, that I do think there might be more terrorist attack, mass shooting. Basically, a holiday season is coming. It's best for you to think negatively at this moment, and if nothing happened, of course we can all cheer and be happy, but you want to be able to protect yourself, so just watch out for that. So my cable trade, again, still in play. Not worried about it, just because stop loss is so far away, and this is really a more swing trade up. Pound CAD is not a good picture, to be honest with you. Got in at 50% here, and obviously we broke out this box. Okay, so take a look at that. So this was a high. Okay, so obviously we broke out the box, continue to trend higher. Now, is this a British pound strength or a Canadian dollar weakness? It's both. Okay, British pound gained strength is because it seems that now the rumor says the government is willing to pay up to $100 billion, basically the fee to the Eurozone. Okay, so this fee, the so-called breakup fee, right, because they are having a divorce right now, this fee is really a biggest roadblock for the negotiation. Obviously, Britain does not want to pay, and the Euro committees want them to pay more. So right now, the government seems to really basically loosen up and willing to pay up the money. That's really, honestly, the smart move and the only move that Britain has, to be honest with you, because they really have not much leverage on the negotiation. Now, the hard truth is that without the euro, Britain is going to shrink. The economy is going to shrink. You already see a lot of news. A lot of banking, financial sector already moved the headquarters to Frankfurt. So that's not a good sign for Britain overall. Britain, yes, it used to be the strongest nation in the world, but that's back in like 1600. Right now, it's not that important in the world scale. It's just simply too small in terms of the economic size. So of course, it's a smart move for them. But of course, if they are going to pay up this $100 billion fee, then of course it's a good sign for the negotiation. Hence, British pound will gain strength. But that alone is not enough to push British pound against things like Canadian dollar or US dollar. Look at US dollar, right? US dollar didn't really advance too much for a cable, but yet Canadian dollar versus British pound did. So it's really because Canadian dollar also has a weakness. So let's take a look at the oil market. As you can see, we did drop today. And just to remind you once again, the OPEC meeting starts tomorrow all the way until Thursday, where they'll come out with the result. Are they going to extend the oil output curb deal well beyond 2018 March? That's pretty much for sure, but how long are they going to extend it? It's going to be 9 months, or it's going to be more or less. Now, the market census right now is for 9 months. That means you might have a buy rumor sell fact. Means if it's really 9 months, not much going to happen. But that's just in the short run, right? If it's 9 months, then you might see oil market drop because the buy rumor sell fact effect. But in a fundamental perspective, it's still a very good news for the oil market overall. And it's still very good news for Canadian dollar overall, because Canadian dollar is still very strong on itself. Now, of course, we did have the government polos speaks today about the rate decision that they had previous to rate hikes and how the banking system is going. Central bank, of course, he didn't really say anything too surprise. Basically, he's saying that the market is resilient and the households should be able to withhold this kind of rate hike. But he did mention it's too early to tell at the moment. So, not much about the new information. However, if that's the case, it's wait and see. So really nothing drastically had changed for Canadian dollar. Canadian dollar is still very strong, but obviously you might have this kind of oil weakness, plus a lot of people are still expecting a more hawkish talk from Polas, and they didn't get that today. So that's why there was a bit of disappointment to sell Canadian dollar. So that's why you have a large rebound in pound CAD. Now, so our stop loss is right here. So obviously, what's going to happen here is you might have people to hunt these stops, right? To stop out a lot of people here only to continue the downtrend. But I'll see what happened. I see 1.72 is a really important handle. And right now, obviously, we might get stop out in this trade. If that's the case, my fundamental perspective hasn't changed. But if the sentiment, let's just say if the OPEC not only does not have a 9 months extension, maybe they'll only have 6 months. If you have a negative news like that, and on top of that, you have a very positive pre-exit negotiation, then the sentiment at the moment will be very strong for British pound and very weak for Canadian dollar. That means that even if I want to sell pound CAD, I will probably hold on to that, wait for a better level, or wait for the market to calm down. So I don't want to go head in hand into the sentiment, even though I know the fundamental is in my side, in my direction. Sometimes you do get caught up in this kind of sentimental play and the technical noises. So of course, speaking of CAD, then if you look at my CAD yen trade, same thing, a continuation of drop well beyond to the 78% retracement. So my stop loss is still below here. CAD yen, the reason Japanese yen gains strength right now across the board, if you take a look at dollar yen, it's really because the North Korean launched another missile attack. So it's very interesting. Well, I shouldn't say interesting because it's not good for the world peace. But I mentioned about this on my Monday video. I was saying that North Korea had been very quiet for the past 2 months. I think something's about to happen, and lo and behold, it happened today. So it's very, very fast. And I think it's going to be like this way until the end of the year. They are going to make another more noises. Does not mean the financial market will trade around that. People might get used to it and stop reacting to it. So again, this kind of drop is not only the strength in the Japanese yen all the strengths in the British pound. It's also the weakness in the Canadian dollar. So let's take a look at what's going to happen tomorrow for the Canadian dollar. We do have OPEC meeting. That's the biggest event. Watch out for that. That's going to really dominate the market. And if this news come out, then Friday you have another catalyst, employment data and GDP to drive Canadian dollar. So it's going to be a quite volatile week for Canadian dollar. I don't know which direction it's going to go sentimentally. I do know fundamentally it should go up. But again, really depend on your risk appetite and where you put your stop loss. So if you are not ready to trade, if you think it's too crazy, too volatile for Canadian dollar for this week, that's absolutely fine. You can wait to trade next week, because this week the news is going to basically shape the direction for Canadian dollar for next weeks and weeks to come. So again, for example, this week, if Polas gave something very hawkish or dovish, now obviously it's already passed. He didn't really give anything. OPEC meeting is going to be a huge impact tomorrow, whether they're going to have agreement for 9 months or less or more, or maybe they are going to delay the meeting, which is not a good sign for Canadian dollar or your oil market. And Friday, we'll see the labor market data and GDP. So again, if you want to be more conservative, you can wait for this week and don't do anything for this week. And then maybe trade Canadian dollar after this week, because we are going to have a more clear direction. Now, New Zealand CAD was another CAD trade I have. Now, New Zealand CAD, I'm more confident. I know this kind of huge trade up retracement and people are kind of worried, but I'm more confident is because I mentioned in the first video that I don't like this stop loss here. I don't like stop loss here. I like stop loss here because that's a more strong resistance at this area. So obviously, if you trade a short-term cycle, you would have get stop out here and stop out here. Okay, so I'm more confident in this one to holding, because fundamentally I think New Zealand dollar is simply too weak. So we'll see what happened in this correlation. But yet, I just want to remind you, all the Canadian dollar trade for this week is going to be volatile. So if you are in, make sure you are okay to lose. That's my biggest suggestion for you. Okay, so enough with Canadian dollar. I mentioned about dollar yen already. Again, not to worry about it just because my stop loss is way below here, and I just ignore all these noises. I know that trading dollar yen is always going to be hard at this moment, depend on the world, but I do think leading up to the Christmas holiday season, you will have more volatile events in the world. So that means Japanese yen will be ups and down, ups and down. That's why I like to put my stop loss way below here. Other trade I'm in is Aussie Newsy. Aussie Newsy, right now we do have the Aussie weakness. Now this comes down to from the Chinese data. It's not here on the calendar, but it's basically a news that there's a lot of bad news, rumors for Chinese economy. But again, nothing is sustainable. So I'm not too worried about any of this downtrend, because I'm very I'm very bearish for New Zealand dollar. And as long as that reason stays, that means the Liberal government and the RBNZ continue to be dovish, then I think New Zealand dollar eventually will pick up. Depend on it again, commodity market is still well supported. So that's why I'm not worried about it, but I do understand the short-term volatility, and that's why I put my stop loss way below here. Okay, so you already see there's another retracement here. So if you're not in this trade, this is actually a pretty safe, conservative trade from my personal point of view. I do like how the Aussie Newsy as a pair to correlated, usually to the upside, and not to mention right now the fundamental bias is very strong. So if you're not in actually right at this level, 68%, I think it's a good level because you have a very good risk reward ratio, right? I got in at 50. Right above here. So if you got in at 60 or even 76, yes, you do very close to your stop loss, but you have a way much better risk reward ratio for this trade. So again, it's up to you whether you like to trade in that way. And another trade I have is Euro. Okay, so Euro. Hold on a second. Euro. I have Euro pound and Euro dollar. So Euro pound. Let's take a look at Euro pound first. Okay, so Euro pound, obviously nothing much happened in a swing set point of view. You have a huge up, huge down today. Now Euro, there isn't much going on in Euro. Okay, the euro strength or weakness on the hindsight has nothing to do with euro itself. It really has everything to do with the counter trade, the partner that you buy euro or sell euro with. So of course, because the Brexit negotiation advanced, obviously that's a good news for British pound, very negative for euro, and that's why you have a huge drop today. So nothing has changed. If you're not in this trade, it's actually back to the entry point. So again, depend on your own risk analysis if you think it's making logic sense. Basically, my logic is that euro right at this week, first of all, it's the end of November, so you will have a month-end inflow into the euro. That's just what's happening every month. So I do think that's one thing for the euro bullish. Second thing is that you have a lot of volatility because of the geopolitical risk in British pound and US dollar and basically in the world. In that case, euro actually becomes sort of like a safe haven currency. It's not a safe haven currency, but it has become like that. So that will be a bullish stance for euro. And third is, why do I like euro more than British pound? Just because although the negotiation might go well, but even if it goes well, it's going to benefit for both parties. And aside from that, the European economy basically recovered well more than the British pound. And British pound simply has a lot of underlying risk, because even if a negotiation goes well, what's going to happen after? It's still a huge uncertainty on people's mind. So overall, all in all, I do like euro pound as a pair to go the upside. Now, in terms of euro dollar, it's similar pictures. I do understand if some people want to buy euro dollar. I totally agree, just because the US dollar is very weak. However, you do have to realize the tax bill reform is coming this week. That means if tomorrow or next day it really passed, that's gonna drop euro dollar to the downside. Okay, just you're gonna have a lot of bullish strength into the US dollar. So be careful for that. Now, if the tax reform bill obviously failed, then I think it's a great chance I might actually reverse my position. Then I think it will be a great chance to buy euro dollar to the upside, because in the current stance, US dollar, even though fundamentally is strong, but euro right now is safer. Okay, it's much safer. It's not involved in the North Korean conflict. It doesn't have a Russian gate, this kind of geopolitical stance. Yes, there is a Germany possibly snap election. I actually think the snap election might not be bad for Germany, because I do think if that's what people see, that okay, right now we have no government just because we didn't vote for Merkel, then a lot of people that didn't vote in the first round, they might go to vote because they don't like this kind of situation that the government is up in the air. So I do think maybe a snap election is not a bad thing for Germany. Okay, so all those things just point out that euro, although fundamentally is not as strong as US dollar, but it's much safer right now, and that's why you have a dollar weakness, a British pound weakness, were all beneficial for euro dollar to the upside. For that being said, I'm still currently in short, just because I'm getting in this trade in the fundamental perspective. Right now, again, we are back at my entry. So nothing has changed, but I will revert my position of US dollar if the tax reform bill really die. If you delay it, then that's fine. I am still hopeful. But if you're approaching Christmas at the end of this year, we still haven't had a passed bill, that's really a worry sign for US dollar. Okay. Today, of course, Powell, the new Federal Reserve chair for next year, had made some comment. Nothing really new, to be honest. Basically, he's saying that December rate hike is coming, inflation is still low, so it's all the same thing. Nothing is surprised the market. That's why it's not really being paid too much attention by the financial market. What's gonna drive the US dollar or the financial market tomorrow and this week is really the tax reform bill. Let me take a look at it. So that's pretty much what I have. The only pending order that I have now that hasn't. Hey, wait a minute. I thought I have New Zealand dollar. Let me take a look at it. Do I have New Zealand dollar as a pending bill, pending order? Okay, all right, that's a weird one. I thought I had a New Zealand dollar, but maybe I didn't, or I canceled my order. So all in all, New Zealand dollar is another pair that are interesting to sell. As you can already see, that's my risk, that's my reward. So I'm waiting for this 50%. Okay. Now, obviously, if tomorrow the tax cut bill pass, then this thing will drop. Then I will not get filled. But if it doesn't pass, then usually will shoot up. Okay. So you can wait tomorrow to make your decision. And if it does get passed, then yeah, you can actually trade this small cycle. You don't need to use this such a big cycle. For me, I probably will put since the tax bill is coming this week, since I have so many US dollar pair, I have euro dollar short, dollar yen long, and cable short. So I'm already at like 1.5%. So that's okay. So I'm probably not gonna do this trade. You could do this trade, but since the tax bill is coming tomorrow or Thursday, I probably just wait for that, because again, if it doesn't pass, it's gonna shoot up well beyond this point. It might really touch 72. So since I'm not in yet, I'll just wait for it. But if it does get passed, and if you happen to be beside your computer, then you don't need to go with this kind of higher level. This small cycle will be good enough, just because the sentiment will be very strong. So right now we are still above 50% Fibonacci, so it's a good chance. Watch out for the headline tomorrow. If they start voting tomorrow or Thursday, and it just gets passed, then yes, you could sell at 68.80 area. But if it does not get passed, it gets delayed, things like that, then I think you should stay. Don't buy any US dollar for now. For me, I already got it in, so I'm in a management mode. But if it doesn't get passed, then you can expect a more deeper retracement all the way, maybe until 1750, because that's a near-term resistance here. Okay, so you can wait there. If you wait there, that will be I think about 61%. Yeah, about 61%. So you could realistically wait here to short US dollar. Now, that's all depend on what happened to this tax reform bill. So again, watch out for the news, and I'll be back tomorrow with another quick market trade alert update. Thanks for watching. Bye-bye.